Today I'm chatting with Craig Parry from Vizsla. Craig, thanks so much for joining us today.
Thank you. Good to be back.
So we're at the Rule conference here, the Rule Symposium. When you come to a conference like this, what do you hope to get out of it?
Money. No, you hope to find new pools of capital, new investors. The fantastic thing about Rick's conferences is he's invested personally in all of the stories here. So he's done a lot of that vetting work that's so hard to do. If you're sitting, if you're an Aussie guy sitting in a country town in New South Wales and looking at the Canadian market and trying to fathom where to invest, how to wade through all of the stuff that's out there and where to invest, very, very tough to do. And of course, the main thing you've got to do as an investor is back people, the best people, because there's plenty of people who'll rip you off, unfortunately, and our business is a little bit known for that. So Rick does all of that for you, so you can sort of sit back and figure out. Come down here to Boca Raton, not a bad place to be, a little bit humid at this time of year, and then sit back and listen to what people have got to say and work out what you want to invest in. But the heavy lifting, the hard work has been done for you. So for us, what we like to do is get down here, talk to a lot of people who've already invested in our various stories. Some of our long-term shareholders come through here, of course, and then get the word out. And I noticed this year, I think Rick, last year's attendance numbers are up about 20%. So you're starting to see new faces come back. A lot of high net worth type US money here as well. So really sort of good retail people to talk to, investors to talk to. Yeah.
So one of the things I love asking people at these conferences, just having casual conversations, is what's the talk of the conference? For example, at VRIC, when I was asking people that, the answer was Snowline Gold. At PDAC a couple of years ago, it was Patriot Battery Metals. Are you noticing any themes or any names being brought up while you're down here?
Great question. Look, I've really only got in late last night, and so I've only been around here this morning. Not wanting to talk my own book too much, but the sort of a bunch of people have come up to me and talked about our Vizsla Silver drill results that we put out this morning. So that's good news. It seems to be the thing that's sort of buzzing the most this morning is Vizsla Silver. I think we put out, 7 metres at 2,300 grams silver equivalent, which is about 35 grams per tonne gold equivalent. So well over 7 metres over an ounce per tonne. So that's that certainly gets people's attention. So there's a lot of talk about that. And of course, at Vizsla Silver, we've got our PEA coming out soon. It should be in the next sort of 2 months. Very good news to come out of that. So a lot of talk about that.
Yeah, and from my perspective, silver actually does seem to be the theme. That's everybody realizes that invest in junior mining. The difference between $30 silver and $20 silver is it's gigantic. For a lot of these companies, they basically shouldn't exist at $20 silver, and then at $30 silver, they're basically money printing machines.
Yep. Yeah, and you can see that. I see, I think my business partner, Mike Connett, CEO of Vizsla Silver, he was on stage this morning. He talked about 4 or 5 different companies. Then we had Keith Newmeyer on stage talking about silver, and he was talking about they've set up a mint in Las Vegas. So they're producing their own silver bullion and silver derivative products, physical derivative products, and talking about the paper trade there. So I thought that was interesting. So there's a lot of talk about silver. I think that, and we've talked about it before, the next few years, the big, where you see the biggest supply-demand imbalances in copper and in silver, I think, globally. So a lot of buzz about silver. A few other good projects around here. I see Sean Kunkun from Dolly Varden. Sean's doing a great job. So there's a few prominent, this is what I love about this conference. I love about what Rick does is that the people that are here, they're all good people, great operators with quality projects, and that's certainly Keith Newmeyer, Mike Connett, Sean Kunkun, Dolly Varden, three of the best silver names out there absolutely are here today.
You mentioned First Majestic, which is bringing a mint online, and I think it's September in Vegas, and we're actually I believe going to the opening of the mint. And part of the thesis that people are talking about there is the idea that if First Majestic starts to mint their own silver, and if they can bring on some other silver producers, they might be able to squeeze the shorts in the silver market. Do you think that that's a possible hypothesis?
Yeah, well, I heard Keith talking about that this morning. It's an interesting one. I think that's worth pursuing. Certainly, Eric Sprott, who's invested in a lot of our stories, Eric's a big believer in if we can get rid of that paper trade, that derivative paper trade in silver, we'll see, a real short squeeze. I thought that I'm yet to digest it, but it makes a lot of sense that if you can bring, rather than people having, participating in that paper trade, buying directly off the producer, it cuts out so many opportunities for, derivative products to be produced against that metal. So it makes a lot of sense to me. I like it. I really like it. I certainly, once we're in production, you've got to caveat that, of course, because we don't have an economic study out on Vizsla Silver's Panuco project.
That's the reason that you're doing this.
That's right.
Is to at least move it along, so either you take it to production or somebody else does.
Yeah, well, we'll do it. We want to do it. It'll be one of the greatest silver mines and greatest mines built, I think. But my point there is I'd love to see some of my dividends, a good chunk of the dividends from the project, come into a vault of my own or a bank vault of my own, and actually take the metal and stay, in control of that metal. I like that approach. I think, over the longer term. Christ, when I started in the business, in 1993, the gold price was about $300 or $400 an ounce. It went down to $250 an ounce. It's now $2,400. The metal's been a 10-bagger over the last 20 years. Plenty of propensity for that going forward. And I think, we're still yet to see the full effects of this huge amount of money printing that went on in 2020 and 21. But certainly the value, inflation that we've seen has been dramatic, and I think the knock-on effects will be felt for many, many years to come. So having physical product, it doesn't matter whether it's real estate, property, vehicles, as opposed to cash, is going to be important. So the more physical metal I can put in a safe of my own, the happier I'll be.
You'd have to think too, and I know that it's kind of an obvious statement, but we look at all the debt that exists, whether we're talking about government debt or personal debt or corporate debt that exists in the system, and interest rates effectively went from nothing to 5%. It's only a matter of time until stuff starts blowing up in the economy, because a lot of people who whether we're talking about student loan debt, car debt, credit card debt, corporations that borrowed a bunch of money to do share buybacks that are now paying higher interest rates on that. Eventually things are going to start blowing up here, and you can't help but wonder if central banks are going to give up the fight on inflation, just because I don't know that they actually can fight it without collapsing the entire economy.
No, you'd have to be very, very fearful of that. And I think if there is a sort of, you see a whole-scale devaluation of the US dollar, a lot of people are sort of theorising, and I suppose, I don't know when he's speaking, but Rick usually has Grant Williams here speaking at this conference. I love to hear Grant speak. Last year he talked about, he was well ahead of the curve. 2 weeks ago we saw formally announced that the Saudis aren't going to sign that the renewal of the 50-year petrodollar agreement. Well, Grant was talking about that here last year, that we're now seeing the exit of the Saudis from that petrodollar agreement. They're starting to take payment in yuan, in RMB, in rubles, and any other currency that you care to mention. So, could we see a sort of demonetisation of US debt? That's a little bit of a worry and something that's coming up, I think, and something that we have to be careful of. And a lot of people theorise that under that sort of scenario, you may see gold hit $10,000 an ounce, silver 100 or more an ounce. I've certainly, I was in Zug in Switzerland back in February, and I spoke to a silver trader there, and he said, well, Craig, absolutely, we're going to see $100 silver in this next cycle, but we may well see $300 per ounce silver. So, a lot of people are talking about it behind the scenes. I think, owning as much metal as you can now is the right place to be. Certainly what I'm doing.
So you've been involved in a variety of discoveries over the years, pretty big ones that you've been either directly involved with or invested in. When you think of where you can get the most torque as a commodity investor, if I'm a retail investor and let's just say that I don't have the ability to do a tremendous amount of due diligence on these names, but I know that I want torque, and I think all commodities are going to rise effectively, like relatively equal. Where's the best place to go get that, do you think?
There's always going to be sort of quirky little, scenarios in certain metals that, it's harder to get a position in that might have, you see what's happened with lithium 3 years ago, uranium in the past year. You've seen dramatic increases in those metal prices. Pretty small markets generally, though, limited scale markets. We're now seeing gold and silver take off. But to my mind, the two supply-demand situations where you see the most imbalance, probably the silver market, where it's about a 1 billion ounce per annum market, currently undersupplied by nearly 20%. That's a serious supply-demand imbalance. It's hard to see where that new production will come from. And whenever you see a market in that much sort of, that much undersupply, you usually see very dramatic metal price changes. And then, my favourite, of course, is the copper market, biggest, deepest market in our sector by far. You see last year, Cobre Panama came off stream. The Panamanian government shut that down, along with help from Leonardo DiCaprio. Good work, Leo. You put 20,000 poor people out of jobs, out of well-paid jobs, back on the street. Should be very proud of himself.
And the metal that we're going to need, right?
Like and a metal we absolutely need. Yeah, there's certainly plenty of copper in his private jet and his big houses, but so that got shut down. That took 400,000 tonnes of production out of a 22 million tonne per annum market. So it's about 1.8% of supply. That was enough to drive the price from $3.50 a pound all the way to $5.20 a pound. So a 1.8% decrease in production was enough to drive the metal price nearly 50% higher. So that's 400,000 tonnes taken out of the market. Imagine when we get to the back end of this decade and we're short 6 or 7 million tonnes per annum. This is why I start talking about $20, $30, $40 per pound copper. We can't keep up with it. It takes a long time. We've been hopeless as a supply side of keeping up with the demand that's coming. There's been no incentives to. This is the fact of the matter. So we haven't done all of, not much exploration, not many discoveries have been made, permitting, studies, all of the work to meet that demand that's growing, hasn't been done for the past 10 years. There's been no incentive for investors to back us to do that. So now we're going to end up in a pinch point where I think we're going to see the most extraordinary, explosive gains in metal prices, particularly the copper price, because it is such a big market. It's a deep pool, and we simply can't supply that demand that's really growing and coming.
I wanted to ask you one question here, and I don't know if you can speak to it at all, but one of the biggest topics right now being talked about in junior mining on social media is Victoria Gold. Are you familiar with it? Do you have any thoughts on what happened there?
Look, I am familiar with it. John McConnell is a friend of mine, very good operator, and I feel awful for John and his team. They've been stalwarts of the mining community in Canada, stalwarts of the mining community in the Yukon, tremendous contributors to charities and First Nations supporters in that neck of the woods. So it's a horrible situation for John to be in. I guess I can't talk technically about it. I've seen photos of the slip. To me, it didn't look too bad. Of course, you run into all sorts of regulatory issues when you've got to rebuild or hit pause on a project like that and then reconstruct it. I just hope that he isn't in a pinch point whereby he can't, come out of it. There might need to be some protections put in place, and then he'll come out the other side. But certainly, it's a robust project. It's a very unfortunate event. I don't think that there'll be any environmental repercussions that will exist. It's really a technical issue that needs to be worked through. I wish him well. I'm sure he'll bounce back and they'll get it up and running again and roar back to life. I've been looking at the share price. Actually, it looks like a bargain right at the moment, assuming they can fight their way out of it.
So you're not writing it off yet?
No. John and his guys are they're tough people. They'll bounce back.
Well, Craig, thanks so much for hopping on here today. I appreciate your time, and I know that our audience loves when you hop on here. So thank you very much for doing this, and hopefully you'll keep coming back on in the future.
Oh, my pleasure, Steve. Really good to be here in person with you.
Thanks, Craig.